This incredible
Can you guess which one of these foods is killing your testosterone? Is it eggs, flaxseed, milk, bananas? pizza or salad? Which one do you think I'm having for dinner tonight? Well, it's not this. It's definitely not this rabbit food. Why? Because this is going to do nothing but leave me craving this. All you have to do to lose weight and have the perfect body is to eat less. How many times?
All right, let's test the microphone. How does she sound? That's true. Hogs get slaughtered too. Elroy, how's your mum? It is 8:00 a.m. in New York City, about 90 minutes before the stock market opens. So this is a fantastic time for currency traders around the world to gather around Forex.Today for us to align our satellites, synchronize our watches, talk everything technical, fundamental, and psychological, or whatever else needs to be discussed. So without further ado, welcome to Forex.Today. Let's go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao ma. Hey, nice to meet you. My name is Wade McDonald. Hey, I'm just a currency trader just like yourself. Always striving to get better. I have a few years ahead of you, so I can share a few things technically and fundamentally. All you have to do is ask. And I will do my best to address your question. There's a lot of people in this chat, so I might not get to every question. I apologize for that. But I have been here every single day for about 14 years. So maybe I'll get to your question in the next 14. So anyway, it's good to see you. Ask questions, get involved, write down your answers and in the comments below the videos, like things like what did you learn today, if anything, and if I happen to share of anything of value, maybe you can document that, and then you can find it as you search your own history. So maybe 10 years from now, you'll say, what day did he wear this weird 2HO hat? And you're like, oh, well, that day, because you documented it, and you'd be able to say, hey, it's 23rd of February, 2021. All right? So anyways, you get to tailor make your own experience. What else? Lots of people ask me for resources like, hey, Wayne, what broker should I use? Hey, Trader's Way is a broker that has earned my respect. A link to Trader's Way is in the description below. Maybe you prefer your mode of learning is through reading. I wrote a book many years ago. It's aight. The description is in a link. The link is in the description below. Training videos, live groups, all that kind of stuff. The links are in the description below. Very nice. Can we have a look at Bitcoin? Sure. Yeah, we can look at Bitcoin. Great. We could also do dollar, yen, so on and so forth. So let's start with that. What currency is most on your mind this morning? What would if I had to cover something faux show, what would that be? What currency pair is most pressing to you right now? Jim wants me to cover every Japanese yen pair. Okay. Yens. Very cool. Pig, Swissy, pound Swissy. Thank you, Marina. There we go. All pairs. Cool. My pleasure. I am here to serve. What do I mean by a funding currency? It's a denominator type currency. Think of it this way, Peter. Let's say the US dollar is the reserve currency. Maybe the second reserve currency is the Japanese yen. That has to do with bond markets, as we discussed yesterday. Japanese government bonds, JGBs, are very deep, very liquid as a market. So maybe it's considered a reserve currency. Very similar. Not quite, but maybe closest to second place. Okay. Anyways, let us look here. Aussie Swissy's probably doing great. Pound Swissy's probably doing great. Kiwi Swissy's probably doing great. Aussie dollar's probably doing great. Pound dollar's probably doing great. And Kiwi dollar's probably doing great. CAD is mediocre. Yen is mediocre. Dollar's probably, yeah. So anyways, let's take a look at a few of these things. You know what? Let's go somewhere else. Let's do this from a different point of view. We can go here, let's say. Okay. Kiwi dollar. Right. Let's do Confluence. I guess that's kind of where I was. Okay. So we always have to say, what do we know? Where have we been? Where are we going? Okay. So what is the target for traders on Kiwi dollar? Okay. You might say, well, Wayne, how would I know that? Well, that's your job. Okay. Where is the market taking Kiwi dollar? $74. Okay, up is not a good answer. Okay, 74-ish, I will accept. Okay, and so what we're looking at is down and up. Okay, what is the basis of this premise? No, 75 is not the right answer. 75 is not the right answer. Actually, I'm a little surprised you guys are not nailing this. It's a pretty basic question. 74 to 15. 74, 13, right? Pretty specific numbers. Okay? We know this to be true because of where they were buying it. Okay? So this is a pretty definitional question. I'm surprised you guys just didn't nail it. Okay? There's the aggressive target. Here's the conservative target. Okay? Okay? So that means something like that. Matus is R2. Depending on which R2 you're talking about, and really that isn't quite the correct answer either, because we know this started at an M2, so really it's M4. But I'm throwing in there psych level, Arctic turtle, and all this kind of stuff. But, for example, we opened out a position, so, you know, I don't know. So let's just put it this way. This predicted that 3 weeks ago, so we're still going there. Okay? Okay? You got that? So if you believe that to be true, your job is to do something like this. There's lots of lines here. If you're not sure what they mean, okay, the big lines here, these are monthly pivots. Okay? And the other ones are weekly pivots. So I'm looking at 2 time frames at once. Kerwin says, what stop loss? Well, when you bought it on Monday, or when you bought it 3 weeks ago, your entry was here, your stop was here. Okay, it's a position trade. So since then, you're probably about break even or whatever. Okay. Now, for you to catch this, right? So anyways, your stop should probably be at 71.50 or something. Okay. So now what? Now you're trying to fold in how do you say it without being rude? Mediocre trades. You're throwing them in pretty late. So now what? It's sort of a catch-up game. So that makes it a little more difficult. But let's remove some information. Well, actually, let me ask you first. How many people here would still like to be a bull in these market conditions? How many people are like, yeah, it's okay? Okay? Don't be a pig. You're either bull or bear or a pig. Okay? All right. So this would be part of your thought process, okay? So now what? Now what? Well, then let's remove some information. Just to reaffirm what we're doing, let's go to position trading bullish. Okay, so position trading bullish. And you can see this was the entry. Okay, and the aggressive target is up here. You can see that. Okay, great. So I've removed a whole bunch of lines, right? Okay, and ideally this doesn't come into play until we hit the target. So let's call it this. And then by then that would move up, wouldn't it? So in the future, this would move up to about here. Right? So we're already kind of guessing at something that kind of looks like do you see that? Because you have to do the math. This would be the low. Let's call this the high. Let's say it closes relatively high. High plus low plus close. So low, high, close divided by 3, and you get a weighted average. And currently, based on this to this, we have that. But if we get the higher and close high, then it's going to be here. All right. So we got that kind of assumption going, and now we got to go into some simple swing trading. Okay. So now what? Let the 21 catch up, hit the target, and that's probably getting us pretty close to our profit taking. So it would look like kind of like this, let's say. So therefore, we get something like this. Okay? Yeah, or a hug. Thank you, Mita. Do I use limit orders? Sometimes, yeah, sure. Well, so the follow-up question is, or do you look for reversals for that area? Well, both, ideally. So let's call this resistance, and I want to sell there. I can put a limit order here and hope it falls, or I could, let's say, let me redraw this. Or let's say now that it's down, I put my limit order here. Okay. But ultimately, I already know what I'm going to do way before I do it. So therefore, but I don't like to be the first in. That's all. Okay. All right. This probably could work okay. I wouldn't be shocked if we got some dollar strength and it turns out to be mediocre, but right now I don't see that on this chart. Now it might be coming because of, backing out a little bit. We're dealing with this right now. And once we hit the target for the month, that could also create some dollar strength. So it's one of these things like, it's sort of like just doing your job. Do you know that feeling where you're like, yeah, I'm just doing my job. You're not in love with it. You don't hate it. You're not excited about it. You're not scared about it. You just kind of do your job. And then if something goes wrong, it's not going to go terribly wrong. And you're like, yeah, I knew it was going to go wrong. So we'll see, right? Like, can you imagine now that we head up and then it collapses, that this could be a reasonable pullback? And I'm totally cool with that. Okay. So now, with all this in mind, I'm really analyzing the dollar. So you should be able to take this information, extrapolate that through relative strength, and be able to put together at least 8 trade plans. And I'm not joking. Like, you should be able to do that. Okay? Now I'm going to switch over to Biddy. Okay. Let's go over there, and then we'll come back to dollar. Okay. Very, 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 very cool. So we've kicked off the daily 21 at, what was that, $4,000 ago? The daily 21. Pretty remarkable. Why do you need a place to buy Bitcoin? But I use Coinbase. Yeah, but so it depends where you are, really. So I lived in a country where everything has to be regulated up the yin yang, and so when I send or receive Bitcoin, I do it through Coinbase, which is an Atlanta, Georgia company, and I live in Atlanta, Georgia. So you pay big fees, really? Oh, I guess so. So, on where would you recommend then? Coinbase has some neat products where I can invoice you as a business. So, like as a business owner, I can send you an electronic invoice for payment and you can pay in Bitcoin. That kind of stuff. It's pretty nice. Yeah, I heard that, Hope. Yeah, I heard that. It's interesting. So, anyways, like this Bitcoin thing, it's interesting. There's how do you say in English? I guess I should say bottom line up front. Um, I don't like how Elon Musk is now pushing the market around with his BS tweets. It's straight up manipulation or whatever. Now, it only works because millions of idiots follow him. And if he says, like the day when he said he uses Signal, he meant for secure chat, right? He's like, I don't use WhatsApp, I use Signal, is basically what he was saying, because people are upset about WhatsApp because Facebook's ripping off all the data. And so anyway, so he says, I use Signal. And all of a sudden, Signal, the energy company, or some stock company named Signal, the stock jumps like 30% in a day. And I'm like, oh my God, oh my God, oh my God, oh my God, oh my God. Right? Like people would say, what did Elon say? And throw money at something. It's so anti what I teach. But he did that with his own stock company. That one in particular was a mistake, but it shows you how stupid the market is, where they're like, oh, buy anything called Signal because Elon said something about it, so we should buy it. That's so bad. Those people will go bankrupt, and I hope it happens quickly. But then also, I think he also does it on purpose. Okay? And he pushed Bitcoin up, and then he said it's overvalued, and then it came down. And that's just nasty. I don't like stuff like that. A, he should keep his mouth shut and build rockets, because I love him for that kind of stuff, right? But he should not take advantage of idiot retail investors that would follow that kind of nonsense. So, he definitely does it on purpose, and he's most likely making an absolute fortune. But now you're getting to the point where he should know better. He does know better. He's not making the right choices, and it's not healthy. Okay? Well, it's borderline unethical and illegal too, Hope. Particularly on his own stock. But if he's, let's say, an industry leader, we'll just give him that, okay? It should be frowned upon by just society in general, right? That you don't need to be manipulating Bitcoin, or, right? In particular, if you own billions of dollars worth of Bitcoin, and now you're hyping up the market to benefit yourself. But dude, you already, like, why? Yeah, an elite brat. Well, I mean, and that's the scary part too, because I'm an elitist in many ways. I understand that. Many self-made people are, because they're like, well, I worked harder and smarter, and I created this all myself, and if other people can't do it, then blah, 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 blah. It's just sort of part of the maturity process, I think. And so there's a downside to all this. But to do it on purpose and say, I'm going to get a bunch of people to buy Bitcoin, drive it up, and then I'm going to dump it and get everyone to sell it, it's not good. Let's just put it that way. It's not good. He should continue, because a lot of the things he does, I think, is really, really positive for society, and there's lots of things I like. I like smart, driven people. I like entrepreneurs. I like him for saying, you know what, let's make banking over email. And people are like, you can't do that. And then he's like, let's make an electric car company. And you're like, you can't do that. Let's make a rocket company and take on NASA. Like, how stupid is that, right? Let's build a rocket company and compete with NASA. I mean, it's so outrageous. And then, of course, he does it better, right? And you're like, I love him for that kind of stuff. Like, just fantastic. But stop flipping the market. I mean, come on. Okay? It's and it shows you how dumb many market participants truly are, where they'll buy $10,000 of a stock and not even knowing if it's the right stock. Like, it's so grossly bad. That he should be more responsible, because I don't think he needs the money. But if he makes billions of dollars on Bitcoin, some of that is coming out of the small man's pocket. Yeah, that coin, I don't like it. The problem is the stupidity in the market like this we've seen before. It typically happens at the top of a market, but I don't think we're at the top of the market based on what the government's doing. So now it's very disconcerting. We have a market that's acting like it's almost over, but then we have a government acting like it's just started. And it's very difficult to figure this out. So like right now, one of the major concerns going on in the market is inflation. And then 5 minutes later on the news, they'll say, okay, inflation's going out crazy. Copper's at all-time high. The stock market's at all-time high. Real estate's up 8%, right? And then, right? So now we're down to sort of the commodities market. And then it rolls over and like, okay, Joe Biden's trying to push through another $2 trillion through. Like, well, then why do we need another $2 trillion? Like, oh my God. right? Okay, extend unemployment benefits. That's cool. But you don't need $2 trillion to do that. Like, if we're already freaking out about unbelievable levels of inflation, we don't need another $2 trillion. Like, it's that. So now, so the government's acting like we're in crisis mode. Like, it's nearly over. We're going, but it's not nearly over, right? So, wow. And they don't understand things like the government is the one that created a lot of this problem. So, oh my God, right? So it's going to be an odd one, and maybe it is the beginning of the end, but probably a 30-year end. Okay. Maybe it all implodes, and my children work for Chinese engineering companies. There you go. Okay. All right. So Bitcoin, when I look at this and I see some of this upward move beyond reason, I see Elon Musk pumping this up. And then this collapse, we know, literally, this is a tweet where Elon says, yeah, Bitcoin's expensive. Straight down. I mean, dude. So how am I supposed to do technical analysis on this? Is this real? Is this not real? Is this real? Did the market reprice? I mean, that's what we're trying to do, right? Where is the equilibrium? What is the fair market value to Bitcoin? That's what we're trying to discern, right? Using fundamental and technical analysis, what is the fair market value for Bitcoin? Is it higher or is it lower? And if it comes down to, well, if somebody sends a tweet, the entire market, the equilibrium shifts, but like that's not supply and demand. So that's the part that worries me. But if you want to be a bear now, that's how you would look at it. That's what technical analysis tells me. There's no fundamental analysis on this whatsoever. So if Elon buys $1 billion worth of Bitcoin today and then sends out a tweet to say it's undervalued, he's going to make $80 million today, jacking the market. So how do I prepare for that as a trader? Okay, and of course you probably can't. So as technical analysis, you'd probably look at it this way, right? And you would have to go further out to be a bull. So like one of these things, like if you're a bull here and you believe it's going higher, what I don't understand is why didn't you buy it at 4,500? Like you didn't buy it off the daily 21 and you're a bull and you're like, but Wayne, put me into a trade now. I'm like, well, you're like, you probably have already missed it. Like it's double bottomed on the psych level, on the pivot level, on the daily 21. Like if you're a buyer and you haven't bought and now you want me to put you into the trade, I don't really get it. Like I don't get what you're doing, but that's that. Okay. So here's the obvious bottom. And I guess you're going to trade some sort of pullback into that, maybe real bodies or something. But I find it very dangerous if you're like, yeah, I'm totally a bull. I'm going to buy this and it's going to go up. But then you don't trade like double bottoms on psych levels, fib levels, not fib levels, pivot levels, and the daily 21, which is like the most important bullish moving average there is. In my book, I say here, you're bullish and aggressive off that line, right? So what are you doing now? And I don't know. That's the thing. I don't know what's going through your thought process. Okay. 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 Anyways, so sorry that sounded a little bit pissy, but I guess, right? I guess when I look at this, it does make me pissy. Especially if you're like, what should I be doing now? I'm like, well, what was your plan? Right. So, anyways. What? Right. So, I don't know. So, there we go. Let's see. Gold is still doing it. Tippy toe up. Right? So, what do we know about gold? Remember how we had this all trapped? Remember we talked about this. It had been falling all year. Okay? Then we had this, and then this, and now it's done this, and this, and this, and, you know, Okay. So you good? You're an investor in Bitcoin. You're waiting for the next big tweet. That would make you a trader, not an investor. But if you've been in Bitcoin, let's say 6 months to a year, sure, you're an investor. Okay? Yeah, COT for sure. All right, so what do you think, guys? So what is your plan? How many people here are bullish on gold between now and the end of the year? I think we did this one maybe on a different chart, but we had this like, I think we had an Andrews pitchfork on this and regression channels and trend lines. Yeah. Might have been Gary that had a trend line on this, and he's like, I know you don't like trend lines. I'm like, well, as long as you're using it right, by all means, man. Okay, so you want this to go up. So you have to understand this tool that we're using here. Yeah, I do remember this one more specifically now. Do you remember I dedicated like almost an hour talking about, look, it's a double bottom or it's not a double bottom. You guys remember that now? Oh, that was the pig dog? Okay. I mean, do you guys remember this now? Like I dedicated a pretty big chunk of time to this. Right? You're either going to trade the double bottom. It's a double bottom. You believe gold is going to go up because you think gold is going to go up. You believe the dollar is going to go down because you believe the dollar is going to go down, right? So like now we're at the double bottom. Like it's either going to do it or it's not going to do it. So what are you going to do, right? Are you going to do it or not? And that's what this trapping was. That's right. Okay. I think you only have to go back last week. Right? And I'm like, so, yeah. So anyways, I don't remember. I think it was literally we were playing the double bottom down here. Right. So anyways, so now it's breached. So now let's say you're a little more conservative. And now, from now on, so even though you can go back to this, you're just going to play it simply as a double bottom. So, which means none of this exists in your mind anymore. All you see is you are now buying dips. Okay? Okay? Blue sky. Oh, Okay, do you see that? So that's simply what you're doing. Okay, until the third week of June, of course. Okay, so now you land your rocket ship into the Sea of Tranquility and you just simplify. And so now you're buying dips or you're not buying dips. Okay, great. So we can, right, in this case, you haven't really had a chance, right? Okay. Friday, you did, actually. There's a front run. So here we are Tuesday, and we haven't hit it yet. Blue Sky is a hit from Midnight Oil? Really? Because there's like beds of burning. And there's um, so yeah, so now you're deciding how you're buying your dips, right? Roger that. Blue skies ahead. Like that kind of hope? You're not talking about my fund? All right. Okay. 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 So now your thought process is, do I buy gold today? Do I buy gold tomorrow? Why you canceled previous movements? I'm not sure what you're saying. Okay. Can you buy tops at major resistance? Hoping no, that is the dumbest thing, Kong. In fact, write it down that you cannot do that. Let's simplify things, Genghis. If you're a bull, you buy dips. If you're a bull, you buy low. Okay? So as a bull, you just cannot by definition buy at resistance. You can't. Okay? Gary, we just shoot at rabbits, but you got to make money. Majority of traders lose money, Genghis. It's pretty simple. Okay? And I don't know how you would even know that that's true, that the majority would buy at resistance. I don't even know if that's factual. But I'll take your word for it. What's the saying? You can get a good look at a T-bone if you stuck your head up a cow's ass. But I'd take the butcher's word for it. You gotta like Tommy Boy, huh? Yeah, I'll take your word for it. So if that's true, it's because they lose money. Okay. So, what was I just? Oh, you threw me off on that joke. Summer. Okay, Gary, let's think about this. Okay, let's think about this. All right, you need to make every 3 months, okay, every quarter. So let's do that. Let's try to clear all of this up. Every quarter, you need to make 10%. Okay? Your max drawdown is 10% negative. And by that, I don't mean quarterly. That means if it ever happens to you, you're fired. Okay? All right. So here we go now. In the summer, I don't think you could do it. Oh, Genghis Khan says these YouTube streams that have massive followings always do it. Yeah, it's dumb. That's just stupid. Like, beyond belief, it's amateur vomit. Like it's so bad. But they're only in the trade for 20 minutes, so whatever. I mean, right? Yeah, it's so silly, Genghis. It's very, it's just, I could see the logic, especially at the right time. Um, it's exciting to people who are watching it on short time periods. Sure, gotcha. Okay. But watching pornography will not make you a better lover. So watching pip pornography on YouTube will not make you a better trader. Okay. So anyways, so going back to this, Gary, in the summer, the beta, okay, the beta is pretty low. Volume and volatility is pretty low. So I think you could probably get half in that quarter. So now what that will tell you to make your math work out, because your investors don't care about quarterly, they care about annually. So you'll have to do better in the first quarter and fourth quarter, okay? And about that in the other quarters, so to get your math to work out. And so what you'll notice is that's about 3% a month, right? So if July and August, okay, let's say each of those you get 2%. Or even 1%. So 1%, 1%, okay? Okay, you're making money. You're just not making enough. But it's not you, it's the market. So now SEP has to be pretty decent, right? So you want to throw down a 5 in September. Okay? And maybe in June you get a 4. Because it starts out good and then it stops, right? Okay? And so if you could kind of do something like this, Gary, right? Where you try to, I don't know, you have to feel comfortable going into June and July and August, that you have to feel comfortable that because the beta is low, your performance is going to be low. But it also shows you when the beta is high, you need to trade well. I mean, you have to go with sort of the seasonality of the business, and not be upset feeling like you're underperforming. Okay? So like, for example, in October, November, and December, okay, that's a month where that's a series of months that hopefully you can get 15%, let's say. Okay? And let's say January, February, and March, maybe that's 10%. And April and May is left. April and May, those are actually pretty good too. So you do another 8% or something, okay? And at the end of the year, you've done all right. Okay? Your approximate, 40, 50%. Okay? That's why sort of like the average of doing 3% a month, okay, that's great, but you have to understand there's never average. You should almost never produce 3%, right? Because the market's either moving or it's not moving. So there can't really be an average. So if you want to look at it as an average, you're always going to underperform or overperform. So I don't know if that's really good, right? So like if you're going to look at it as a bell curve, you could say, all right, my goal is to produce 3% a month. But the distribution is, let's call this 1, 2, oh, I'd have to do this differently. Let me try to actually think about it for a second. 3, 4, 5, 2, 1, negative. Something like that. Okay. So your goal is 3% a month, right? But your distribution's gonna, oops, these are dots, are gonna look like this. Okay. And we call this, is it kurtosis? Does anybody know? Where you end up having fat tails, where instead of 80% being on the mean, let's say 80% is in the tails. Does anybody know, is that the right word? Kurtosis? Statistical kurtosis? Oh, with a K, no wonder. Kurtosis? Let's find this out. I don't remember, to be honest. Oh my God. There we go. Kurtosis is the fourth standardized moment defined as where mu is the fourth central moment in the standard deviation. Where this looks right, doesn't it? The exact interpretation of Pearson's measure of kurtosis, except for excessive kurtosis, is used to be logic is simple. Kurtosis is the average or the standardized data raised to the fourth power. Any standardized values less than deviation peak would be the measure of tailedness of the probability distribution of a real valued random variable. Like skewness, kurtosis describes the shape of a probability distribution, and there are different ways of quantifying it for theoretical distribution and corresponding ways of estimating it from the sample of a population. Different measures of kurtosis may have different interpretations. So anyways, the measure of the tailedness is that's the part I was getting to, right? So if I bring this back, normally when you look at the distribution of, right, using their language, the distribution of a population in the data set, you're going to see that most things are about average, right? The way of looking at it is, what's the average grade of a senior in high school? Most are going to be in here. Some are going to be A students. Some will be failing. But most will be sort of in the middle, right? B and C students. Well, what we're looking at, and the frustration many traders have, is they set out and they're like, okay, I need to do 3% a month. That's going to get about 50% a year. That'll be golden. But you'll almost never do it. You'll either significantly underperform, let's say 1.5%, or you'll significantly outperform, let's say 4.5%. And you'll very rarely have 3% months. Okay? So that's kind of what I'm saying. So this is a strange way of answering Gary's question, but how do you handle the summer? You go into summer knowing that you're going to have a fat tail on the left side of your distribution, right? You're going to underperform on average, but on average, that is average. If you average the average, okay, then doing 2% is actually probably pretty good. 2% a month. In July and August, each month you do 2%, you should be happy with that. And I think that's what we did last year, wasn't it? And I'm like, you should be okay with this. And also, if you have an opportunity to take 2% or even 3% in July because the market popped and you were just positioned perfectly, you should probably book that, because you're like, 3% isn't anything to brag about. And you're like, that's an average month, but it's not an average July. That's an above average July. So you could have distributions for like, how do you normally perform in July? And you'll find you're on the right side for comparing the populations of July performances. Okay. So, you know, maybe that's an exercise that should be done. That'd be interesting to say, right? Annualized, there'll be kurtosis, but if you're analyzing every individual month in of itself, then you would want to perform around the mean. Meaning, if the mean for July might be 2 or even 1, I wouldn't be shocked is the mean. So if you're sitting on 3 for July, Gary, take the profit. Because now you're overperforming in July, which money-wise might not be that good, but total-wise will be great, which means you have sort of more freedom and leeway in October, and you'll have the strength to do what needs to get done, which means you're aggressive going into October because you already know you're ahead. It's sort of like going into the last part of the race, one more lap, and you got a lead already. Okay? So, I don't know. I don't know if that answers your question, Gary. Yeah. Yeah, well, that's the other thing. You should probably, here's what we typically do. Gary, we typically in the summer day trade and swing trade and do them sort of independently. So in other parts of the year, you'll day trade into your swing trades, right? Typically what we'll do in summer, you take the swing trade because it's what we do. And we're more accepting of getting out on the weekly, right? So we might say, well, this might roll into now a position trade. We could be in this swing trade for 3 weeks. Well, in the summer, if you buy at M2 and you hit M4, you'll probably take the profit. But also, here's the other interesting thing. Day trading, you may also take the profits on the day trade, and you're not going to say, well, I bought it on Tuesday. It fits perfectly in my Monday swing trade, so I'll let that run to the weekly target. And then tomorrow I'll buy it, at the daily M2 and let that run to the weekly target. And pretty soon you got 3 trades that are entered at different times on similar strategies, but all share the same target. Because you have this idea that it's going to run for macro reasons. Well, the macro reasons have gone. So now what I'm saying is you might day trade it, pop 80 pips into your pocket or 60 pips or whatever it is, and then you actually take the profit. Meanwhile, you're going to let your weekly and run do its thing, but you're also not likely to say, it was such a good trade, I'm going to let it roll for another week or two. And so you let it roll over into the new week. Now you might just take it to, you're in on Thursday, out on Thursday, and then you start fresh. Because what all you're trying to do is A, not lose money, but B, if you get so lucky as the market has given you 2 or 3% in a July, you feel very good with it. You're like, oh, thank goodness, that was a good July. You have to change, you might say, okay, that makes sense, but what you might be missing that I've experienced over years and years and years and years and years of trading through the summer is that in the early days, I thought I was doing something wrong. And I was tempted to either change what I was doing or change my behavior. Now, that sounds like the same thing, but it's more like changing my strategy or changing my behavior would be like trading more, trading bigger. But I'm like, oh, dang it, I'm not making any money in July. I killed it in June. What the hell's going on now? What am I screwing up? And I wasn't mature enough to know back then that I haven't changed. Therefore, there's no need for me to change. The beta changed. So my alpha would not be to outperform by trading more or trading bigger. It would be like the alpha is just roll with it. Roll with the beta. Achieve the beta. Okay? The market will give it, the market will take it away. And I kind of consider it sort of not a dead zone, because I'll tell you a couple of things. You can make money in the summer. A lot of people will tell you can't. It's stupid. Of course you can. But you have to change the game. The rules of the game change. Okay? And by the way, if you ever get sick of a job where you can work for 3 hours, play some trades, make some money, and then go outside and go to the beach, I mean, like, why would you not trade in the summer? It doesn't make sense to me, right? You guys remember last year? I'm on the beach. It's like 7 o'clock in the morning, and I'm smoking a cigar, and I got a fabulous cup going, right? And I have to work under those horrible conditions for a couple of hours and make some trades. I'm like, dude, what a privilege, right? Like, why would you not do it? Why would you want an EA to do stuff for you? Like, what? You don't like this? Then you shouldn't do it, right? It's a lifestyle, guys. You have to fall in love with the lifestyle. You don't want to cut corners and find easier ways of doing things. You just got to do what you do right. So you sit down for a couple of hours, play some trades, jam some stops. Great, you're done, right? You guys remember when I did that in Orlando? My God, that was probably 5 or 6 years ago when I took the kids. And we got this giant 2-bedroom suite, I guess you'd call it, with a nice kitchen and everything. And but they didn't have a good desk area. So I cleared out the closet. I put the desk in the closet, and I plugged my laptop in and everything. And so I ended up making it an office. And we just had, like, kids, chill out. This is what the Wayne do. He's going to wake up early in the morning. You're going to have breakfast and shower and put on your Mickey Mouse hats. But Daddy has to set up his trades. He's going to sit in the closet on his laptop with 3 screens and analyze the market. Right? Analyze the market. Set up his trades. Right? Do his job. And no, we're not going to be on the first boat, but we'll get there just as the gates are opening. Remember? I'm like, but this is just how you do it. So anyways, the market is going to be the one that determines how much money you make. And when I understood that, then I had to understand, like, well, what's the personality? And I bet you all of this led to, like, the idea of seasonality. No, I generally don't use EAs except for things like my stop management stuff. But to enter a trade, never. It makes me sick to think of it. Right? It's like watching a sober alcoholic have a drink. Like, you don't even want to see it. And Greg's like, I learned so much. Yeah, okay. But still, right? It's just for me, that's how, I don't. So, I mean, I'm not against it, but I don't think it's helpful. Okay? At least I didn't find a park bench and sit on it to trade. So anyways, so then the next part of this is I asked myself, well, if the market determines how much I'm going to make every month on any given month, what is the difference between January and July? Okay? And that kind of led to my understanding of seasonality. So This is a great conversation now because very often you ask me, well, Wayne, how did you come to understand seasonality? And I'm like, I don't know. Well, 20 years of experience. But maybe it was this kind of thought process where suddenly I had to liberate myself from this pressure of like, oh man, I screwed up July. I must be doing something wrong. No. I'm not doing something wrong. There's something different with July. Okay, so now I can adapt to July, but it's not me doing something wrong. It's just what July is like. So then the next question would be, well, what is the difference between January and July? And you start to learn these things because you ask these deep questions and you come out of it with, oh, I can anticipate. You see that? Now I can anticipate what July is going to be. I can anticipate what January is going to be like. Okay? In some months I got to perform on the right tail. Some months I'm going to produce on the left tail. And on the left tail months, if I can get closer to the mean, right? Then enjoy it, because then it takes pressure off of outperforming down the road. Okay? Cool. Sorry to overcomplicate that. Mm-hmm. And twisted thoughts that spin round my head. Okay, there are some very interesting setups yesterday on these yens. I don't see it on this chart. I wonder where I had it before. Scan yens. Scan pivot yens. Maybe it's this one. Scan yens. Yeah. There's some very interesting trades last night. Okay. Look at that. Okay. That was probably, what time of day was that? I don't know. I think it was pretty late by then. I don't know, 10:30 or something. Staring at this, but anyways, my oh my, right? My oh man. Russell, yeah, that's right. Black by Pearl Jam. It's a great song. I love playing it because I can sing so poorly, so it sounds good. I know someday you'll have a beautiful life. I know you'll be the sun in somebody else's sky, but why can't it be mine? Okay, very nice though, right? Right in the zone, man, right in the zone. Okay, the target that we created yesterday is 129. Okay. Very cool. Very cool. Okay. So 127.50 to 129. It's not a big swing trade. I mean, that's actually a little bit small. It's a small swing trade, 150 pips. And it's also small because I have some doubts about it even being able to climb that high. But it's straight up. I mean, right? Okay. Yeah, Marina. But the funny thing is, I remember back in my early days, I remember going from losing money to then, on demo, of course, to, I remember one time, I think it was with my dad, I had a conversation. I'm like, it took me over a month to lose that money. Like, not, right? Like the amount I would lose in a day, suddenly it was a week, right? Let's say you lost $100 a day. And then after a while, you're like, well, half my trades are winners, half of my trades are losers. And now it took you a whole week to lose $100. And I'm like, I'm getting better, right? Right? And it was just so good to like work 200 hours in a month and break even. You're like, I'm getting it. One day I'll make minimum wage. But I do remember the thought like, oh my God, it took me so long to lose this money. I'm getting better. Well, theta, isn't that what we do every day? Yeah. Uh, yeah. So the thing is, when are you going to tiptoe in it for next month? Right? The other thing, FX Noob, so let's go to your concern. That's fine. It's a legit concern. Let's go to Confluence. Okay. Here's the thing. So I'm not sure your thought on R1 pivots. Okay. I don't know how many people teach pivot points now, but I used to be one of the only people. There was some dude in Canada that was pitching some service on pivot points. I don't remember the guy's name. He was in Victoria, BC, I think. He was doing pivot points, and then I was doing pivot points. So no one besides the two of us I ever saw do pivot points at a conference. And I know also that to be true, where I was one of the keynote speakers at the FXCM conference in Las Vegas. And I have a lot of fond memories of that. That was epic. But I did a whole presentation on pivot points, and people freaked out because FXCM didn't have charts that offered pivot points. So they're like, everyone's like, we all need pivot points. And then someone's like, but we don't have them, but we want them. So I could see now that there's probably lots of people pitching pivot points. I have no idea what else is out there, but I would assume there's lots of people doing pivot points now. And it would make a lot of sense if you didn't know how to trade, that you would say, well, this is an R1 pivot point, and resistance is resistance. Resistance is important. This must be a sell area because it's resistance, okay? However, I observed pivot points for many, many, many years and developed rules of engagement based on those observations. And in most situations, the R1 just simply isn't that important. Okay? Because it's trending. If you understand what the math is doing, how does R1 get developed? Well, how does the central pivot get developed? High plus low plus close divided by 3, right? Which means it understands what the high was, and that impacts where this is. Okay? So now imagine if you were also saying the close was high, thus lifting the CPP up. Therefore, it probably is an uptrend or has been an uptrend. We don't know if it'll be an uptrend in the future, but because we know the math is saying this is up, then wouldn't it make sense to say if this is based on last period's high and it's an uptrend, then doesn't the math tell us we are going up higher? If R1 was the top, if this was a sell pivot, then we wouldn't be trending. Do you see the logic there? Then we would be ranging. And so I put that in a different compartment. What I say is it's going to be trending most months because that's what a trend is. And in this case, if you're doing the math properly and understand how the R1 is calculated, now most people they don't even know that kind of math. They're like, I don't know where this came from. It's voodoo magic. Okay. R1 seems like it's important, but they should just call it the old high. Okay, they should call it an H1. Then to get R2, you look at the distance from this formula now, because this is a CPP. And you're like, well, what was the distance between that and R1? And then you take that distance and go to R2, which is now a standard deviation above the, right? This is if you can consider this like one standard deviation from a mean, this is the mean. How far from the mean? A deviation. And then 2 standard deviations would be R2. So like one way of thinking about it, R2 would be an important target, but R1 wouldn't be. R1 would only be important if we're not going to make a higher high and instead have an inside month and range from R1 to S1, because now you know how R1's calculated. Then you say, well, with that same logic, S1 would be near last period's low. I know, right? So an inside month would be we range between R1 and S1. But if we're trending, and that's your job to know if we're trending or not, then we should be going up here somewhere. Somewhere between 1.5 to 2 standard deviations from the mean. Okay? FX noob, does that make sense? Right, correct. So that's why I say on this other time frame, if you are a bull. Now, I don't know if you're a bull. You might say, Wayne, it should range. Okay, then set up your... See, the nice thing, guys, if you make your decisions and you say, well, Wayne, I think it's going to range this month because of X, Y, and Z, then I'm like, okay, well, then get ready. You're at the right price now. And particularly a time, it's probably the right time and the right price for you to now use technical analysis to observe, right, to confirm or deny that it's going to roll over and head down. And if so, somewhere around here, take the shot and put the stop. And then when you're down here, move your stop to break even. Okay? But I have serious doubts that anyone else teaching pivot points would have that kind of understanding. I highly doubt it, because I just doubt it. I don't think they got it through hard work and observation. And they probably are not smart enough to be able to do the math. So to them, it's like a mysterious magical thing. That's R1 for some reason. Okay. But you have to understand the data enough to say, well, my thesis, because we don't know, but your thesis at this moment might be that we can make a higher high this month. So if you think we're going to make a higher high, then you're not worried about this line. Now, it's an important line, especially if it fails to make a higher high. You're like, oh, snap, inside month. Okay? But you probably would expect a higher high if that's your thesis. And now you know what kind of analysis you need to be doing. Okay? And check this out. Okay, if you recall, what was it, early last week? I said this actually might be good enough. So I don't know what your opinion is. Okay, I don't know what your opinion is, but I'm pretty sure last week I said this is good enough. It might be good enough. And you should be worried about that because we know M2 predicts M4. Okay, we got there fairly early in the month, about the 15th. And that might be early enough for a counter trend trade. We just don't know. If it was early, it would definitely be a counter trend trade. Out here, probably not counter trend. So this one, I'm not so sure. And there may be plenty of market participants that are looking for this. There may be plenty of market participants that are looking for this. Okay. And less market participants looking for this, let's say, something aggressive. Because on top of that, we know March often brings in strength. Okay? So now you have to decide which one is your thesis. The biggest issue is I don't think many people think this far. But it's not even that far. We know. How many times have I talked about it? 20, 30 times? Japanese yen might get strong in March. No, Robin, I never like it. Doesn't mean I don't do it. And by the way, that's not counter trend. Robin, I told you, let's say, if you were here in July of 2020, I could tell you that the yens are likely to get strong in this time period right here, right now. Okay? Not that it will, but it certainly can. And very often has. So now you might say, well, Wayne, that could really make this interesting. Okay, cool, set it up. Because I don't know the future. Okay? So to me, that wouldn't be counter trend, that would be seasonality. And by the way, this means out. It doesn't mean trade a counter trend. It just sets up a counter trend if that's what you want to do. Okay, Robin? You understand that? So the way I teach it, just so we have the same language here, in and out in a direction of a trend is the only thing that I'll talk about. Okay? I'm not going to say, now that you're there, now you should be selling, and then you should be buying, and then you should be selling, and then... No, I ask you, you should pick whether you're a bull or a bear. Okay? That's an entry, that's an exit, and what happens next, nobody actually knows. But this is the easy money. Okay? This is the easy money. Okay? So now what? I don't know. But if your thesis now, and remember, imagine yourself, Robin, 12 years from now. Market conditions are likely to be very different. Stock market's going to be different. Commodities market's going to be different. People in charge of the Fed will be different. The policies will be different. Global macro will be different. It'll be a very, very different world in 12 years. So you'd be stuck in a problem like this where you're like, well, what do I do? Will it go up or will it go down? And then you say, well, very often yen can get strong in March, so they're on repatriation flows. So what should I do here? Well, first of all, you could have the strength to wait because you don't feel like you're missing much. And then if this price did hold, what would you do between now and Monday? Yeah, I'd probably find an opportunity to sell it. Okay? If it doesn't hold, then we're probably going to head up here first before coming down. So therefore, when you get up there, you look for a rejection. Okay? Okay? Edward, I think of not elk, but of buffalo, bison, Tatanka. I don't see the... Oh, there it is. Tatanka. 1690, on the Canadian prairies, Henry Kelsey reported that the Cree called these noble animals Tatanka, which in English of this day called buffalo. More appropriately, buffalo, were actually bison, but first sighted by Europeans. Right? Look at these animals. They're amazing. You can't imagine how big these animals are until you stand next to one. And the farmers or the ranchers have learned that you can't put up fences. They just don't even recognize the fences. Not that they're stupid. It's just, it'll just knock it over without even trying. Like barbed wire, dude, you can barely get an arrow through that hide. So you just push it over. I mean, there's not much you can do to a buffalo. So they'll tell you, the ranchers will tell you that you have to learn and work. You have to learn from the animal about their personality and stuff and work with them. Give them what they want and they need. Then there's no need to push the fence down. But if he wants to meet a pretty lady buffalo, he'll just knock the fence down. So you might as well open the gate because he's going to get what he wants. So, pretty amazing animal. Okay. So is this critical? It can be if it is. So the bigger thing is how will you respond if the R1 holds? But if you think we're trending, then I have no concerns about that R1. If you think that the market exited here, then you should, and then you would set this up probably not today, but next week. Okay? Cool, right? All right, commodities, do some oil. Sure, for sure, eh? My, oh my, WTI. Okay? So this is the market renormalizing, trying to find the fair market value of what it's got, what it needs. Moose. Yeah, Daryl, a moose. And you know, and someone else brought up elk. Moose are amazing. And also elk. Like I remember I was walking down the streets of Lake Louise or Banff or something. Beautiful, right? And winter's day, spent the whole day skiing, and now we're going out for dinner or something. And I'm walking down the street, and I remember talking to someone over my shoulder as we're walking, right? Like a couple of other people, maybe a bigger group, and I'm looking kind of behind me as I'm walking forward. And then everybody stopped, and I'm like, what? And I turned, and sure enough, in the middle of the sidewalk in this downtown, there was an elk, and his head was down. And he lifted his head up and he looked right at me, and his head was wider than my body. Not the antlers, which were there, just his skull was as wide as my body. And then, like, antler, right? And then he just, like, it was startling. Yeah. Raymond, you don't have elephants in your backyard. You got to be careful. Americans will take that literally. Okay, yeah, if you go to Kruger National Park, yeah. But not in your backyard. Correct me if I'm wrong. Yeah. No, but you got to be careful. You got to be careful. People will think that. They're like, oh my God, Raymond's got wild elephants in his backyard. That was pretty funny, though. Yeah, you got to watch yourself in Johannesburg, right? You might get eaten by a tiger. No, you should watch yourself in Johannesburg, but you should don't worry about the tigers. Worry about anything on two legs, right? Those are the ones you got to worry about. Yeah, Ronald's like, yeah, they really do think that. Well, I know that because I moved from Canada as a kid, and of course, I kid with to other kids, but still, like, you'd be shocked that a high school student wanted to know if we had running water, you know, that if we had to worry about the Indians, stuff like that. I'm like, yeah. The other thing, which is funny too, anyways, well, no, I'll take it all back. You have to buy me a drink to get some of these stories. All right. So my oh my, WTI, a lot of this priced in based on the freeze, the news about the freeze, the shock about supply, all that kind of stuff. Of course, we're also eating down inventories. If you recall way back down here when we were at like 55, I took you through the EIA, IEA, OPEC websites and a bunch of other things. Maybe that was a swing trading group. But anyways, we discussed it all. And that, interestingly enough, I said I'd probably avoid the Canadian dollar because I look at oil and Canadian dollars very similar, right? So WTI and CAD have assumptions already priced in based on the known information. In this case, we're talking about the polar vortex freezing all the infrastructure in Texas. But once we kind of get past the headline news, we find like too much was priced in. Or the trade, very often it's just the trade, it's not fundamentals, but you know you can push the market, so you push the market, and then and then all those traders leave and they're like, okay, where's oil supposed to be? Okay? So it's done what it's done, and now we kind of have to clean up the mess a little bit. And so you have to decide, are you going to buy this dip based on technicals, or are we going to kind of float around here and reassess the market, reassess the damage, get a closer look at the T-bone? Actually, Michael, I've never seen that movie, but I know of it for sure. Okay, so like, what do you think for oil? Okay. Okay. I think maybe 2 days ago would have been a buy, maybe. What do we do now? I don't know. Wait. It's like one of these things like, yes, bullish, Stephen, but it could be bullish and overbought. Okay. So maybe buy it at 60. Okay. maybe 59, 60. So we'll see. I kind of like, I wouldn't mind letting it kind of reset and reanalyzing it next week. Because, you know, I don't feel like I have to buy it every day. I only want to buy it when I can make money. Do you understand? So, like, I would buy it at 58. 58 looks pretty good. Would I buy it 61? Probably not. Okay, remember, we're just trying to make money. We're not doing anything complicated. We're not building rockets. Okay? I guess we're going to leave it there. We're going to leave it there. Stock market just opened, kind of burnt out. So, yeah, we'll leave it at that. If you're in my live training group, I may or may not do my lecture today. Here's my thought. I have a lecture prepared, and then there's another one I'm working on. And they're complicated. Well, not the one that's done, but the other one's complicated. And I could knock out the one I've done simply so that it's done. But I kind of started double guessing in a recent meditation of mine, and I'm like, do I even need to do it? Is it really that important? And I kind of cover it in the fundamentals course. Do I need to do it again in the macro course? I'm like, yeah, maybe. But then I'm like, so I know it's taught in every course, but in this case, is it important? Is it necessary? Could I skip it? And so I'm kind of in there. And then I might just work on the other one, which is really complicated. So I met with my my PhD candidate the other day, and I'm like, here's my idea. This is what I want. And so I started doing the calculus with him and stuff. And he's like, wow, that sounds really interesting. I'm like, I know, right? But then I'm like, but I don't want to do any of the calculus. And he's like, And we just sat there with crickets like, right? So I kind of want to do that because I think it fits more into the macro side of it, and then maybe skip the one I did, which is just supply and demand, and then move closer into breaking down GDP into subcomponents. You see that? And in supply and demand, like, do I really need to do it? Do we need to shift curves and prices along the curve? And I did it because I know it's expected in a course like this, but then I thought, is it, why? Which is a dangerous question, right? So I could just do it. So I don't know. I'll look back and I haven't seen it in a couple of days, several days. I'll open it up and see if I should just do it for the sake of doing it. But I may, as I'm writing the course and finalizing the course, I probably just might remove supply and demand. Right? Michael, I'm not following you. I must have missed something earlier. So, like, maybe help me think this out. I'm teaching you macroeconomics. Why do I need to do supply and demand? And like, so, I mean, I teach you supply and demand in the monetary. So the fundamentals course is going to be renamed the monetary policy course, or central banking course. That you need to shift curves to show the change in interest rates, right? I don't think I need to do that. Okay? Because I think the way it should end is the course will teach you about how measures of growth and employment, inflation, and all these things. And at the end, it'll be like, well, what if you wanted to change the conditions, not just because macro analysis tells you about the conditions, right? Like it says you have COVID, but it's not a vaccine. You understand? It's a test to tell you if you have COVID. It's a test to say your growth is slowing down in your economy, or inflation is picking up, or you're inefficiently using your labor force. But it doesn't give you the cure, and that's where the central banks come in, right? And fiscal and monetary policy come in. So, like, what curve am I shifting when I'm teaching you how to shift curves? Like, I know it's in every macroeconomics course, but I think we should probably just skip it. Unfortunately, I've already spent a lot of time and money creating the course or that lecture, but I might just throw it out and say, nah. Oh, okay. Sorry, Michael. No, supply and demand macroeconomics. We're not talking technical analysis and charts. Okay. Okay. So again, the next one will lead towards more like business cycles and a complicated model. I mean, is there a way of doing it? Let me try something. Solo growth model. Let's see if I can give you. Is there one that'll show the math? That's pretty lame. I guess I could just throw. Here's a quick one from the CFI Institute. So, like, doing a lecture like this without any of this math. Right? So, like, literally teaching you the steady state of an economy based on capital and labor and all that kind of stuff. And without doing the math, but it's like, it's all math, right? It's all math. So, that takes longer thought because most people do the math and they don't get it. Right? A lot of the people that knock it out don't get it, but they can do the math. Well, I'm trying to do the opposite. We're not going to do the math, right? We're not going to do the math, but I want you to understand the relationship between capital and labor and the alpha you address to each, right? But you can see when you look it up, you're like, wait, this is all math. Okay, so I'm going to teach you this. So I thought I'd skip the one on supply and demand today. I might do it just for recording something. I may not because I just might want to sit in the sunshine. But I'm working on this now, and even my PhD is going, this is going to be a complicated one. I'm like, yeah, I know, right? It's going to be epic. It's going to be good. It's going to be good. We're going to do it. It's important to me that we do it. But how do you teach when it's all math? How do you teach it, right? But I look up to like, what's his face? That did a brief history of time to like teach quantum physics to lay person. Like, wow. Noble cause. Michael says, I really want to enjoy the math. Forex will force myself. Well, I would recommend you take a college level statistics class. I really enjoyed mine only because as I was doing the math, I said, oh my God, this is what we do in Forex, right? Oh, that's what that is. That's what that is. Okay. Yeah, Raymond, if I do the lecture, it's always 2 p.m. Eastern time. Yeah, thank you, Stephen Hawking. Yeah. So he might have been a hack at the math, but so was Einstein. He couldn't do the math. But kudos to someone trying to write a book and say, well, we're not going to talk about the math because the math is too complicated for even people that understand math. Okay, so anyways. It's fun. I'm enjoying this process, right? But anyways, so we'll get to that. So I think I'll skip the supply and demand. I'll do the solo growth model and talk about business cycles, because then you'll get the idea of seasonality, and then we can start looking at subcomponents of GDP specifically. Well, you don't have to be a rocket surgeon, Mahir, but I'll tell you, it's complicated enough. And most people won't be able to do it. Oh, Michael's, you're talking about Harvard X? Yeah, there's a lot of MOOCs or whatever they call them now on edX and stuff like that. Sure, Harvard X, sure. Yeah. You don't get the ring. Where's my ring? Do I have a ring somewhere? I have a gold ring somewhere, but I don't know where it is. I honestly I haven't seen it in so long. Yeah, you don't get the ring, but yeah, you can take Harvard X courses. So yeah, so if you guys are into the math, do statistics, college level statistics class. You don't have to do advanced, just sort of entry level. It's very interesting. So like, for example, you would most certainly learn kurtosis, right? So like today I'm like, oh, like fat tails. I'm answering Gary's question about summer. I'm like, well, you can't look at your population or your data set on an annualized basis, because then you're going to try to achieve the middle of the bell curve, but that's going to be impossible. So you need to understand that you're going to have fat tails leading to kurtosis. Well, if you don't know statistics, it's going to be very difficult. Like, I don't know if Gary knows statistics or not, but if I threw that down like, oh, well, if you look at the distribution over the course of a year, you're going to have a lot of fat tails. And he might say, what? Right? So I'll break down the conversation like I did today, just make sure that you understand, on average, you'll never be average. Nor should you think you'll be average, otherwise you'll be frustrated. So I can take 20 minutes, explain the math and the concept, okay? But boy, it'd be great if you had some sort of statistical background. If you could do the math and understood the kurtosis, that'd be good, because at some point, someone might be reviewing your trade history, your track record, looking for fat tails. Okay? So, for example, should your overall performance have fat tails? Well, it'll be a skewed version. Okay? So we'll go back to here now and looked at your annualized. So let's say this is your 3%. Okay? Let's make this, or even let's make this 0. 0, 1, 2, 3, 4, 5. Okay? And then how about negative 1, -2, -3, -4, -5. Okay? So, okay? In this case, you should have a lot in here. Okay? Only a few here and a few here. Okay? So now you have some results here and some results here, more than the losses, and then you're going to have less but more powerful in this area, right? And so now you would take this on the annualized, and you should never have any big losses. So what I'm getting at is statistically, right, you should have no big losses here. So this is not happening. You'll have a few losing months. Most months you do fine. And so now what you'll have to do is shift the bell curve and redo it. But even then, you should have half decent amount of really awesome months. Most of your months should be pretty boring, closer, okay, closer to a center of the bell curve, and a few months that don't work out. But this would be few and far between. So now you not only would you have to redraw your curve, but the shape of the curve will need to change. You'll have a big fat tail to the right, no fat tail to the left. You'll have some losses here, but not terribly many. Most will be pretty mediocre but positive, and then good months that occur, again, based on your beta, and then therefore the shape of your curve might change. So you'll get a really thin tail, right? So now let's say, let me try to manipulate this with another color now. I guess orange. We'll do this orange one. So now you might get like flat, 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 right? So you have a really thin tail here, actually. Let's make it that way. I think if I kill this, it'll kill the whole thing. Yeah. So now you'll have a real thin tail here, then it'll peak, and then it'll fatten out as it falls here. So you have a much different shape versus the standard one. So very small, a few, a lot, less, but more than the left. And so you have a different type shape. And the shape will tell you. So someone might take all your data, plot it out like this, and say, oh, this is not a normal distribution. And you say, that's because I don't have the same amount of big winners as I have big losers. It's not a normal distribution. If I had months where I could lose 10%, but other months when I make 10%, then it would be balanced. It would be a normal distribution. No, this is not a normal distribution because I never have -10. Never. I don't even get -5. I do, right? It will not show itself in this distribution because it will not happen. It cannot happen. My risk management will not allow for it to be possible. But every once in a while, I do hit a home run and hit plus 10% months. Do you understand that logic? If you were explaining this to a client, you say, well, we have abnormal distribution because I never have a fat left tail. There's skewness to the kurtosis. Okay? And if that doesn't get you beautiful people to pay attention to you, what will? Okay? So, if you find it intriguing but you don't quite follow, you can take a statistics class at any university in the world, most likely. Will teach you this. It's right. And the interesting thing is the people that are going to analyze your trade history probably only think this way. So you'd be at a disadvantage to say, oh, I'm a pretty good trader, and then they'll look at it and they bring up some tail issue, and you're like, I don't know what you're talking about. Kurtosis? What's kurtosis? Skewness? What do you mean skewness? Look, I'm really good. I make a lot of money. And they're like, well, you take a lot of risk for the reward you get, and we're just not really interested. Okay? Okay? Now imagine we had this conversation only through math. Right. Most people, their brain would just ooze out of their ears. Okay. Well, here's the top of the bell curve and all that. Well, what you'll see is I didn't quite draw this well because actually this will shift as well. Right? Your average shouldn't be 0. Your average should be closer to 3. And then you're going to have quite a few that are above average, some that are disappointing, but none that are bad. Okay? You should never put yourself in a situation where you have bad. Okay? Well, we already know what Powell's going to say, right? Everything's good. Everything the Fed's done is great. Right? Probably supports the government stimulus. And they have the tools to handle inflation. And yes, the GameStop volatility that all the senators want to talk about because it'll get them press in the newspaper and on TV. They'll say, yeah, it's exciting, but it poses no systemic risk to the banking sector, the financial markets. It's not going to harm liquidity. The markets are not going to freeze. Credit's not going to dry up and go away. So really, this will be an issue for financial market regulators outside of the Fed. But as far as the Fed or the FDIC, it's not really, it's not a concern. And I just did 2 days worth of testimony in, 28 seconds? Okay. So you say, why did the market dump? Okay, define dump. Okay, the Dow is down less than 1%. Is that a dump? The S&P 500 is down 1.26. Is that a dump? Okay. So I'd say no. No, but still, well, your language is important, right? So is it a crashing? No. But if it did, I would also explain it to you that it's supposed to. Okay? And that we're going to buy it up later, right? The other issue, like a headline like this, Tesla drops 12%. Yeah, but it's probably 300% overvalued. So it's got a long ways to go. So yeah, you could watch the testimony if you want. But like I said, we already know. You should know. You should know. If you've watched 100 of these before, you'll know. If you don't know now, watch it. Find out what he'll say, what he doesn't say. Take notes. Think about it. Treat it as like your job, like your boss paid you to watch it and take notes. That's how you should be trading it. Okay? And if you were a buyer of gold, you had an opportunity while we were speaking. And it's probably come and gone. Okay? But there's nothing to front run is what I'm saying. All of this is just normal. Okay? There's nothing unusual going on in the market right now. It's just sort of doing what it's got to do. Very cool. So, peace on earth. May the pips be with you. May your profits be above average. And I'll see you later, y'all. All y'all. Thanks for being on my team. Thank you to Traders Way. Thank you to YouTube. Hey, YouTube, would you please promote us, please? We're not one of those groups that gets a whole bunch of amateur traders to buy at resistance so they can make 28 pips, brag about how rich they got. We don't do that, YouTube, and this is the kind of stuff you should be promoting, YouTube.